You check your bank app. A number is sitting there. It feels solid. Here's the uncomfortable truth. Most of that money was never printed. It was never saved by someone else. It was created the moment you borrowed it. Because we're told a simple story. Banks take deposits, they lend them out. Money moves around. End of explanation. That story is comforting. It's also wrong. Let's slow this down. Imagine you walk into a bank and ask for a loan. A home loan, a business loan, even a credit card. You sign the papers. The bank doesn't go into a vault. It doesn't check if another customer saved enough money. It doesn't move cash from someone else's account into yours. Instead, it opens a computer and types numbers into existence. Your loan appears as money in your account. At the same time, your debt appears on the bank's balance sheet. 2 entries, 1 click. That's not a metaphor. That's literally how modern banking works. Over 90% of the money you use today wasn't created by governments or central banks. It was created by commercial banks issuing loans. When you pay rent, buy groceries, invest, swipe your card, you're mostly using bank-created money. And here's where it gets strange. If you pay back the loan, that money disappears. It doesn't get recycled. It doesn't go somewhere else. It's deleted. So money is constantly being born and destroyed quietly inside bank databases based on how much debt exists. Now ask the obvious question. If banks can create money so easily, why don't they just create infinite amounts? Because there's a leash. It's just longer than most people think. Banks are limited by regulation, capital requirements, and one big risk: borrowers defaulting. Every loan is a bet that the future will be stable enough for repayment. When confidence is high, banks lend more. Money supply expands. Asset prices rise. Everything feels prosperous. When confidence cracks, lending slows, money supply shrinks, markets freeze, recessions appear. Money isn't just currency. It's confidence turned into numbers. This is why home booms look magical until they don't. Why startups get flooded with cash in good times, then starved overnight. Why crashes feel sudden, even though the system was fragile the entire time. Now, here's the part that makes people uneasy. Banks earn interest on money they created at almost zero cost. They don't need to earn it first. They don't need to borrow it from someone else. They create it, then charge you for using it. That doesn't make banks evil. It makes the system incredibly powerful and incredibly dangerous if misunderstood. Because when things go wrong, the losses don't stay private. When too much money is created and poured into speculation, bubbles form. When those bubbles burst, the economy doesn't politely reset. Jobs disappear, savings get wiped out, governments step in, and suddenly, money that was created out of nothing becomes debt that everyone has to deal with. That's the irony. The system runs on private profit during booms and public rescue during busts. Zoom out. This isn't just about banks. It's about how modern economies grow at all. Growth now requires expanding debt. Expanding debt requires expanding money. And expanding money requires banks believing tomorrow will be better than today. So what happens in a world facing aging populations, climate shocks, geopolitical tension, and slowing growth? What happens when confidence becomes harder to manufacture than money? Because banks can create money with a keystroke, but they cannot create trust. And once trust breaks, the numbers don't matter anymore. So the real question isn't how banks create money out of nothing. It's this: how long can an economy built on borrowed confidence keep working before reality asks for repayment?